Welcome to the PAX Capital Podcast, where we talk about wealth, business, mindset, and other tips and resources that can help you grow in all areas of your life. I'm your host, Preston Kiles. So, today's episode, we're actually going to talk about how I lost over $566 in the stock market, but how I've been able to regain that money and become way more profitable. So, back in 2020, right around May, we were all in college and we got kicked out of our dorm rooms because of the whole coronavirus. So if you were a college student at that time, you got kicked off campus and had to go back home because of this crazy COVID stuff. So what wound up happening was I was doing some research on the internet, talking with a couple of friends, and someone mentioned options trading. Now, I had never heard of options trading or what that is. And I knew about stocks and investing in stocks, buying shares, buy low, sell high, that theory. So, and I was doing that, but when someone dropped options trading, I was like, what is that? I've never even heard of that. And so to give you like a dummy example of options trading, basically what it is, let's say I have this Apple phone, right? So Apple stock price, just for instance, let's say it's $200. With options trading, you're able to buy a contract that says in 3 months or a day, 2 weeks, whatever term you want it to be, Apple stock price will either rise to $205 or it'll fall down to $195. So let's say you bought a 3-month contract here and the contract costs you, let's say $200. What happens is if that contract rises, so you buy the call contract. So the call means it's going up. So it's going up to 205. So it's at 200 and it hits 205. You were here investing $200. When it hits that 205, you have a potential return of either 100, 200, 300 based off the Greeks in that contract. Options is really in depth. So I'm kind of giving you guys just the keep it simple, stupid example so we don't overcomplicate it. And on the flip side, if you were to buy what we call a put contract, which means the stock is going to go down, so it goes from 200 to 195, you make money putting that $200 here, and then it goes down. You make more money as it goes down. So these contracts allow you to kind of leverage your capital. So instead of buying one stock share of Apple for $200, you're able to buy a contract, and when that contract moves or falls, you make more money. So instead of buying a share, and if it moves up to $201, that means you made $1. In options, if it moves from 200 to 201, you've made more than $1 depending on what contract you're in, things like that. It's a little bit more in depth, like I was saying. And so once I discovered options trading, it was lit. I won't lie to you, it was lit. I thought this was how I was gonna get rich. I was like, I found it. I figured it out. I'm gonna just trade options for the rest of my life. But little did I know that without due diligence and research, you will get burnt and lose $566 in a time frame of almost 3 to 4 months. And what happened was I was joining these options call out groups. And so with these call out groups, what actually winds up happening is they have someone that's either a stock guru or analyst, whatever they want to call them. And you pay maybe 10, 15, 25, 30, 40, whatever the case may be a month to be in these call out groups. And this guru or analyst, what they're going to do is they're going to tell you, go buy this contract on Apple stock or Amazon stock or whatever the case may be is. So you get in and you buy it. But what I didn't realize was with these call out groups, when you buy in at what these analysts are buying in, you're not really getting the price that they pay. So they pay a price down low because they called it out. So when they call it out, everybody and their mother is getting into the stock. So the price to get in the contract starts raising higher, 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 and hits the top. So now you're buying in at the top of the contract, which means you're spending way more money than they did to get in. So if it loses, if that stock price drops at any moment, you've lost all of your cash flow, or you lose a good percentage of it because you bought at the top instead of buying in at the bottom, especially if you don't have your own research put in behind the call out. And to make a long story short, I lost $160 in 10 minutes trading Johnson & Johnson options. And after that, I realized I wasn't taking my options trading serious. I had bought some courses, even did a live Zoom call with someone. They walked me through how to trade. We even walked through some paper trades. And I thought that I knew everything. But sometimes what you don't know is what you don't know. Even when you think you know it all, you still don't know it all. And I lose that money, 160 in 10 minutes and 566 in over 3 to 4 months. I really had to step back and just quit. I had to just let it go because I lost $566 in 3 to 4 months. That's money that I could have invested into the Dream Chasers business or whatever the case may be. So I stepped back and I started taking the courses that I had more serious. So I really started going over all the indicators and the technical analysis, writing them all out. And I was studying. I really became a student of the game because after losing $566, how that feels, it hurts. You ever lost $160 in 10 minutes? In 10 minutes, and you can't get that back? Yeah, that hurts. So when you go through some pain like that, you're going to make sure that the next time, if that happens, you're better prepared than when it first happened to you and you had no preparation behind it at all. And so I really started hammering hard on studying these courses. And I didn't get back into options trading probably until January or February 2021, I want to say. That's when I really started getting back into it because I was doing a lot of studying. I did a lot of paper trading. And if you don't know what paper trading is, it's basically you can go to like Webull, for instance. This is a stock app that I use. Webull has paper trading, and they will give you paper money, like monopoly money almost, and you can trade stocks. Now, you don't get to get the actual profits because it's fake money in a sense. But what they're doing is they're showing you, okay, hypothetically, if this is the investment that you wanted to make, this is how it would go. So you can paper trade it and you can watch, is it going to go up? Is it going to go down? And you can kind of start to understand the stock market there. You know what I'm saying? So that's what I started doing. I started paper trading Nike, Amazon, a couple of just big name brand stocks because I really wanted to see what they were going to do. And once I really got my technical analysis underhand and I really started understanding how things work more on these stocks, I decided that I had the confidence to get back into the market. So the first trade that I took back in the options market, I was investing in this company called Energy Transfer. Now, they're an energy company based out in Texas, and they do a lot of, energy work, with oils, fuels, all those kinds of things. And they're getting into more of the cleaner energy sector as we speak. So I found value in this company. I read over their stock charts, did my analysis, did my due diligence, everything added up. And the beautiful part about this stock is that they also give out dividends. I'll talk about dividends in a little bit. And so with Energy Transfer, I got in the stock when it was about $9. It was trading right around like $8.90, somewhere. It was bouncing between those two price ranges. So I got in, and since then I've been in, and it's now at $10, and it keeps continuing to rise. And I have a contract now that doesn't expire until 2024 on that. And as we speak, it's up, I want to say $40, $50. And I'm going to let it sit because I now have another 4 years. Yeah, it's 2020. We're in 2021. So 3 years. My bad. Can't count. Time is crazy. But I have 3 years to let this contract sit and gain more money. Now, there's going to be some days where the stock price may fall a little bit. So I might lose a little bit of money. So when it falls, I do what we call dollar cost averaging. I buy another contract. So let's say I bought a contract at $100. And then the price was rising. So the price contract goes up to like 150. So this means I'm profiting $50. But then let's say some bad news comes out and the stock goes down. So the options contract goes from 150 to 100 to maybe $80 now. So now I've lost $20. So in order to recoup that, I'm going to go buy another contract at $80 So now this puts me at a lower price point, an average lower price point. And what that does is now when the stock starts to go back up, I'm going to make a little bit more money now because I bought in at a lower price and I kept investing in that. So energy transfer is a great trade that I use, and I'm not a financial advisor. Don't get it twisted. I'm not telling you what you should invest in or what you should not invest in. I'm just telling you to invest, period. Energy transfer was a great trade. And then another great trade that I had was from that dude, Chris Johnson. So if you haven't seen my tweet, I tweeted about Prague, and Chris Johnson dropped that play on his Instagram. And he was talking about Prague's at 93 cents a share, and his price target was $3.50. So I looked at that trade and I did my own research. I made sure everything lined up with how I would want to trade the stock. The old me, the 2020 person, would have hopped in blindly with no due diligence. Now, it would have paid off regardless. But I made sure that this time, before I hopped in there and spent that money, I did my research. And it played out perfectly. I got into that stock about a month ago, got out it a couple of days ago, made a total profit of $355. Now, remember, I've lost $160 in 10 minutes, made $355 over a month off one stock. That's from doing my due diligence, having my patience, not trying to make as much money as I can and being greedy, all of that. Having a strategy, having patience, and doing your due diligence, that is going to work for you in this market, because this market that you trade in, you don't know what could happen. So you have to be prepared. You should always have a strategy for if a stock goes up or if the stock goes down. If it's a value stock, when it goes down, you buy more. If it's not a value stock and it's dropping, get out. When it's going up, pull your profits. Don't let it get all the way up, get greedy, and then it goes down the next day and you lost all that profit you had if it's not a valuable stock. So you have to have your own research and due diligence. And now, with that being said, I currently, as we speak, I have close to about $1,200 invested into the stock market right now. Actually, probably almost close to $1,500. So $1,500 invested in the stock market. And remember, a year ago, I lost $566 in 3 to 4 months. And now I've rearranged my whole trading strategy. And now I see more profit than I've ever seen in my entire life based off trading stocks. So my whole point of today's episode is to tell you that when you lose money in the stock market, do research. Or when you lose money in general, do research. Figure out why you lost money. How did you lose money? Where did you go wrong in your process? Whatever you are investing in, even if it's not stocks, if it's in your own business and you lose money, what did you invest in your business that lost you money? Because what we have to do as people, we have to have the ability to self-assess. So self-assessing means, where did I go wrong? Where did I mess up? Taking the accountability and saying, okay, I messed up. I'm going to fix it now. I'm going to figure out, I'm going to re-strategize. How do I fix this? Maybe I talk to someone, maybe I buy a course. I just do my research online, watch a couple of YouTube videos, YouTube University, baby. So whatever the case may be, is you got to have the ability to self-assess, because that's how the greats become great. The great stock traders didn't become great by blindly trading. They lost some money, they self-assessed, look where they went wrong, where everything messed up, and then they made it better. And just because you make things better, that doesn't mean you're going to be 100% correct every single time. It's not the case. It's not how life works. We all know that life keeps the scoreboard. Life keeps the scoreboard. So you got to deal with what life hands you, but you got to be able to assess it and understand how to get better from it, so that the next time when I lose $160 in 10 minutes, which won't happen again because I have due diligence, at least I'm prepared now. I have a backup plan. I have a strategy, rather than, well, I just lost $160 in 10 minutes. I just lost $566 in 3 to 4 months. Guess I'll just take my L and keep it pushing. So you can give up, but if you're going to give up all the way, or go back at it and tell yourself that you're going to get this right. Because it's either you're in or you're out. There's two sides of life, just like with stocks. There's two sides. It's either up or it's down. So you got to figure out when it goes down, are you totally defeated? Are you just done with that stock? Are you getting out? Or when it goes down, are you like strategizing? Are you reading this has a potential to go up? It's a value stock. What is my price target? What is the most I'm willing to spend? Blah, blah, whatever the case may be, figure that out and then take it to that next level. I don't want people just to look at this podcast and be like, oh, well, he just told us what stocks to invest. Once again, I don't want that because I'm not a financial advisor. So if you lost some money and you invested in the stock that I invested in, that's on you. You didn't do your research. I am not a financial advisor. I want to make that clear. Just so people on the internet get weird about that, man. You internet people are weird sometimes, man. But outside of that, when it comes to investing and things like that, always make sure that you are doing your due diligence, you're doing your research, you're making sure that whatever you're going to get into is a good trade or you have a backup plan in case things go to the left. Don't be like me and have to take a loss of $560 in 3 to 4 months for you to suddenly realize, maybe I should re-strategize. Maybe I should redo this again. So I wanted to share my story and my losses because I hope that this impacts someone so that when they start trading, you know what? I'm not going to be blind about it. I'm not going to be dumb. I'm actually going to have a strategy, have a process, learn how to go through it. And now that I've upped that strategy, now you're seeing better returns. You're doing way better than you thought you were. Little things like that. So it's about the little things in life. Because remember, in order to get through things, you have to go through things. I'm going to say that again. In order to get through things, you got to go through things. So remember that. So end of the episode. Love you guys. Stay tuned for episode number 3. We're in the works, baby. And shout out to Team Dream Chasers Basketball Academy. Go over and get that merch. TDCB Academy on all social media. Links are in the show notes as well. We even got our website in there too. Follow us on Instagram. Also follow PAX Capital on Instagram. That's PAKS Capital on Instagram. Stay tuned with us, and we'll see y'all next time. Peace.